Banana to my head, this is the setup that I would use for the rest of my life if I had to only use one setup. And in fact, I do only use this setup to trade, and I've used this setup to get funded. Just a couple of weeks ago, I got funded with Top Step Trading Futures, and I only really used this strategy to make that happen. So it's very, very powerful, okay? Now, as always, I recommend you use the source material, ICT's video on the silver bullet, but this video here is just because some of you like to learn from someone else, you know. I always recommend getting this from the horse's mouth, but if you want it from the donkey's mouth, here's your video, okay? So I believe the silver bullet strategy is powerful for these reasons here. Number one, it's a time-based setup, okay? So ICT says that you want to frame your trades around time first and then price, okay? And the reason for that is because very specific things happen at certain times of the day, and that's when the highest probability setups will form. So that's the silver bullet setup is powerful because it only forms during a very specific time window, okay? So it's higher probability trades during these times, and we'll go over that a bit later. Second, there's very clear rules for entry, so there's minimal guesswork on your part. Thirdly, it's very consistent, happens every single day, all right? And it delivers enough movement and price to make a living from. ICT himself recently said that this is the strategy where you could quit your job within 90 days just using the silver bullet setup. Now, I don't know how true that is for all of you, but you can see most of these setups will deliver about 5 to 10 points. And that sounds small, but put it to you this way, on my funded account, 5 to 10 points delivers anywhere from $500 to $1,000 per setup taken, per profitable setup taken with this silver bullet strategy, okay? So, you know, $500 to $1,000 a day, that's probably more than you earn at your job. Was for me anyway. So that's the next point. And then lastly is very limited risk exposure. Number one, because you're only trading during 1 hour during the day. You're only looking for a very specific time window where the setup will form, meaning your time exposed to the marketplace is limited. 1 hour a day. There's very little chance for you to blow up your account in that 1 hour, okay? And secondly, your stop loss can be quite tight with these silver bullet setups. Typically, my stop loss is no bigger than 5 points. All right, so very, very small amount of risk exposed to the market with this setup. That's why I'm a huge fan of it. Now, we're going to go into the details and nitty-gritty of this setup, but just to give you a quick overview of the strategy, just so you know what we're diving into. Here's the simplified checklist for the strategy. So number one, you're determining your session. We'll go over when the silver bullet forms, but determine which session you're going to trade in. Two, identify the most obvious draw on price. Where is price most likely to draw to? Number three, wait for displacement to occur during that 1 hour window. Number four, allow price to draw back into a PD array within that displacement leg. Number five, enter your position with a stop loss above displacement and take profit at the draw on liquidity. Give it time to play out. Number seven, profit, okay? Now, this might not make much sense to you now, but we'll go into it, all right? So, first thing you need to do with the silver bullet setup, and don't worry, we'll show you a live example of this, so it's not going to be just hindsight and theory. I'll show you a live example of me using this, all right? So first you need to determine the draw on price, okay? This is the most important part of this setup. Now, price will typically draw to one of these areas here. All right, pause this video, take notes. You'll need to come back and rewatch this because it's a lot to take in. All right, but come back to this slide here. This is the most important slide in this video. First, you can determine price will draw towards probably a previous day's high or low, a previous session's high or low, a previous week's high or low, a return to new week opening gap, an expansion away from the new week opening gap, a return to an optimal trade entry level, or confluence of the ICT 2022 model. So if you're not familiar with that, that's basically looking for inefficiencies in the marketplace, fair value gaps, or a draw towards equal highs, equal lows, those types of things, all right? So this is not a novice strategy. You need to be familiar with ICT's concepts in order to make this work. So for those of you that are familiar with these concepts, this will make sense to you, but to the rest of you who don't know what this means, go and watch ICT's videos or look in my video history. I explain pretty much all of these concepts as well. So first you need to determine the draw on price. I like to have these all marked out on my chart, okay? I normally have the previous day's high and low always marked out on my chart. I have the previous week's high and low always on my chart, and I always have the new week opening gap on my chart. All right, so I have these visible every single day, so I know where price is most likely to draw to. All right. Now, important to note is that not all of those setups will be there every single day. So price might not take out the previous day's high low, might not take out the previous week's high or low, might not take out, might not return to the new week opening gap every single day. But the important thing to know is that at least one of those will be there, okay? At least one of those is most likely going to be your draw on price. Now, the main emphasis here, like I said, is determining where the next most likely draw in price action will be. This is the key. This is the magic bullet, all right? Your entries and exits are the least important thing. It's the easiest part, but knowing where price is most likely to draw to is the magic bullet, all right? And that'll get better with time. That'll get better with time. Most days, at least one of those draws in price will be at play. Now, these are the times when the silver bullet setup will form, all right? So you have three options. You have the London between 3 a.m. and 4 a.m. New York time, Eastern time, always Eastern time, all right? The algorithms supposedly run on Eastern time, so have your charts set to EST. So the London silver bullet will form between 3 a.m. and 4 a.m. The New York morning session will form between 10 a.m. and 11 a.m. And the New York afternoon session will form between 2 p.m. and 3 p.m. All right, and that's the one I personally choose and specialize in, is the afternoon session silver bullet. The important thing here is it's suggested that you choose one of these and specialize in it. Get really good at identifying it, okay? Don't try to trade all of these silver bullets. Just choose one and become a specialist, right? That's what I'm trying to do here with the New York silver bullet, is specialize in identifying the 2 to 3 p.m. silver bullet trade, all right? Now, if you're like me, just hearing these is probably not enough for you. You probably want to know why the silver bullet forms during these times. Why is this happening? And recently, ICT had a little talk, and he explained the following. This is why he says the silver bullet occurs at certain times, at these times. So the silver bullets will always be there because of the surge in volume at market open. So if you look at the times again, we'll go back, look at the times. So 3 a.m. to 4 a.m. is half an hour after London's open. So you have the first full trading hour after the surge in volume at the open. New York, half an hour after the 9:30 a.m. open, Chicago open, which is the highest volume influx during the day. And then New York PM, half an hour after 1:30, which is the end of lunch, which is when the volume returns to the market, okay? So it's the first full trading hour after the break in the market. And ICT says that all algorithms wait for the first impulsive leg to run higher or lower once their volume is influxed into the market. And then smart money will use that inefficiency. These algorithms will use that inefficiency created in that impulsive leg, which is the silver bullet. And from that displacement leg, they'll use an efficient entry point from there, okay? They will dogpile on and use it as an efficient entry point towards counterparty positions, which is what we're going to be targeting, okay? Now, this all makes sense soon. Now, the silver bullet setup. So what you're going to do during your chosen time window, so one of those 3-hour-long windows that we identified earlier, you are looking for that leg of displacement towards the obvious draw on price, okay? Now, you might be asking, what time frame do you use to identify this? I personally like to look for it on the 5-minute, 3-minute, and 1-minute chart, okay? Start from the top down. ICT suggests not using anything higher than the 15-minute chart for the setup because it is, only in an hour-long window. So by definition, it's probably not going to form on the 60-minute chart or something like that. You want to look on the smaller time frames because it's quite a small targeted setup. Now, once that leg of displacement has occurred, you want to wait for price to draw back into an inefficiency or PD array to make your entry. You set your stop loss above the displacement leg and take your profit at the draw on price. All right, this might be going over your head right now, but once I show you on the charts, it all makes sense. So here's an example. Now I'm going to play a clip from last week where it was a perfect silver bullet entry, all right? 2 p.m., like I said, I specialize in the afternoon silver bullet. So here is a trade I took at 2 p.m. I'm going to speed the video up by 2 times. So if you don't want to watch the video and watch it play out in double time. It should take about 3 minutes. I'll put a timestamp below. You can just skip the example and we can get into the explanation of why that was the silver bullet trade and why it worked. Like the tell all levels right there. As long as price stays below there, I'm pretty happy with it. Obviously, want these equal lows to be taken up. There's the 5 handles right there. I'll see how price looks when we get to that point. South Africa guys in the house. Yes, sir. Yes, sir. Looking good. There you go. It's 5 points. Just need a little bit more of a push for that equal low. And boom, done, boys, done. Finished. So that's pretty good. Nice and easy day. $815. All right, so here's the reasoning behind that trade, okay? So number one, here's the time window highlighted in purple, all right? So that's between 2 and 3 p.m. That's the PM session silver bullet. Now, as you can see, at 2 o'clock, this is on the 3-minute chart. At 2 o'clock, we see a move of displacement lower, all right? So displacement is just a energetic move in a particular direction. As you can see, price pushed down energetically to the downside, broke swing low, swing low, swing low, broke 3 swing lows. So it's quite a powerful move to the downside there. Now, what I'm doing, where is my draw on liquidity? So what I can see here is price has moved towards this equal lows. That's confluence with the 2022 ICT mentorship model, where equal lows and equal highs are generally good draws on price. Price doesn't want to leave them open too long. So there's very obvious level here. 3 equal lows, in fact 4 if you count that there. So 1, 2, 3, 4 equal lows, right? And because price is displaced at 2 o'clock, made a displacement move to the downside, I can be fairly certain that price is going for that area before reversing back to the upside, as it was overall a bullish day. But like I said, those areas aren't left open for too long. So 2 o'clock happens, the price leg displacement occurs, cool. Now I'm waiting for my entry, right? So I entered based on 2 things. Number one, there's a fair value gap in here. See the gap between these 2 candles? The displacement leg down left a fair value gap. Secondly, I'm entering on the order block. So the change in the state of delivery from the downside, we have a bullish up close candle there, almost in line with the fair value gap. So I put my order, as you could see, right at the bottom of the order block. I quite like using order blocks. They seem to be a bit more reliable than fair value gaps. So my order's sitting there. I get tagged in when price comes back up, and then I'm simply targeting those equal lows. So I let price comes down, boom, my trade closes off there for just over $800. Nice quick move, and then not long after that is taken out, price reverses back to the upside, all right? So that's almost a perfect example there, okay? Perfect identification of what the short-term draw on price would be, equal lows, and that was confirmed by the displacement lower towards that zone, all right? So that's it. There's the simplified checklist again. So as you can see, determine your session. For me, it was the PM, afternoon, 2 to 3 p.m., silver bullet. Number 2, identify the most obvious draw on price. It was those perfect equal lows. Number 3, wait for displacement to occur towards that during the 1 hour window. Displacement occurred to the downside right there towards those equal lows. Allow price to draw back into the PD array within that displacement. On PD array there was the fair value gap and the order block. Boom. And then enter your position with a stop loss above displacement and take profit at the draw on liquidity. Okay, so there was my stop loss above that swing high, and then my take profit was right at those equal lows. Okay, so it's that simple, guys. It's that simple. Now, it takes time to really learn how to identify the draw on price. That is the hardest part, but they can only really come with practice. So practice it in demo. Practice it in forward testing if you're brave enough, you know, with your own money or whatever. Do whatever you want, not financial advice, but it just comes with time, okay? That's the only, everything else is easy. It's determining where the most obvious draw on price is. That's the hard part. So learn how to do that. Watch it happen every single day. Specialize in your session. That's what I'd probably advise most, is specialize in a particular silver bullet so you can get really good at identifying it. And that's what I'm doing. Watch me trade this setup live every New York PM session, 2 p.m. Eastern time I go live. I'm using it to document my road to $1 million as a futures trader, and I'm doing that all through Top Step at the moment. So yeah, come watch me 2 p.m. I'll be doing it every single day, apart from Monday. I don't trade Mondays. So yeah, that's it, guys. Simple as that.